your monthly loan payments begin again after 3 years of reprieve, 3 years of forbearance. They begin again October 1st, okay? Now, there is really good news inside this program. Your repayments will, if you opt in to the new SAVE plan, will be capped at 5% of your monthly discretionary income. That is a huge reduction from the 10% under the current plan. For half of all borrowers, you will be paying payments of $0, nothing. And there is also included in the SAVE program a path to full loan forgiveness, okay? 1/5 of all borrowers are not going to pay a single dime and will have their loans forgiven, all right? But you have to opt in. You are not automatically in this program. And so it's very important. The reason I feel so urgent about putting this episode out as a bonus episode this week is because you have to proactively do something. Welcome to the Sunlight Podcast. In this show, we're talking about taxes, money, and careers for self-employed people who have a big vision for changing the world with their work. I'm your host, Hannah Cole, artist, tax pro, and the founder of Sunlight Tax. If you're a creative or soul-centered entrepreneur or wellness practitioner who wants to grow your business sustainably, manage your taxes, and build a stash of fuck you money so you can control your time and have a bigger impact with your work, you are in the right place. Hello, welcome. I am really excited to bring you an episode about tax updates about the new student loan forgiveness. So this episode is your complete guide to the new, improved, much more legally sound student loan forgiveness. It's a timely episode because interest is going to begin accruing on September 1st. I'm recording this in August, but you're listening to it in September. So as you're listening, interest is already now newly accruing after having been stopped for 3 years. And importantly for you, payments of your federal student loans start back up again October 1st. So if you haven't yet gotten ready, now is the time to prepare yourself for those federal student loan payments coming back. All right. So I'm going to give you the nitty-gritty this hour. Today, I'm going to give you all the details of the program. I'm going to give you some reassurance about why I expect that this time, this student loan forgiveness plan, repayment plan will remain law and will not be overturned by the Supreme Court. I'm also going to tell you how to opt in and what your next steps are. So you know at the end of this episode exactly what you need to do. All right, ready? Let's jump right in. The things to know, sort of broad strokes here, are interest is starting to accrue on your federal student debt beginning September 1st. Okay, so as you're listening, that has already happened. And your monthly loan payments begin again after 3 years of reprieve, 3 years of forbearance. They begin again October 1st. Okay, now there is really good news inside this program. Your repayments will, if you opt in to the new SAVE plan, will be capped at 5% of your monthly discretionary income. That is a huge reduction from the 10% under the current plan. For half of all borrowers, you will be paying payments of $0, nothing. And there is also included in the SAVE program a path to full loan forgiveness, okay? 1/5 of all borrowers are not going to pay a single dime and will have their loans forgiven, all right? But you have to opt in. You are not automatically in this program. And so it's very important. The reason I feel so urgent about putting this episode out as a bonus episode this week is because you have to proactively do something, okay? I'm going to tell you what to do. All right, so here we go. The plan is the SAVE plan. SAVE stands for Saving on a Valuable Education Plan. This is an income-driven repayment plan. And it bases your payments on your family size and your income, okay? It's very generous. It's more generous than the current plan that you're on, whatever that is, okay? About 1 million more people than under current law are going to qualify for $0 monthly payments, and that could be you. So a couple details. Let's get into the details of what this plan includes, all right? First of all, there is what is called an income floor. Basically, the government, the Biden administration, has created a floor for your living expenses, saying you need X amount of your income just to live on, right? Pay rent, groceries, etc. And the SAVE program raises that floor from where it currently is, which is 150% of the federal poverty guideline, to 225% of the federal poverty guideline. Okay, so just to give you an example so you can see what those numbers look like, for a single borrower earning under $32,805 a year, you will not have to make any payments, or you will have a $0 payment every month. Okay, so for a single person, that's an income under $32,805. For a payer in a family of 4, who earns under $67,500, that person and below will have a $0 payment, okay? Those are the new floors on repayment. Secondly, if you make your payments, and that includes $0 payments, if you are timely and make your payments, then no interest will accrue on your outstanding loan balance. This is new. This is not what exists under current law. So this is really exciting and really good. And it solves a real problem. The Biden administration is really trying to solve a genuine problem, which is that a lot of people have taken out student loans and their loan amount just keeps expanding and expanding and expanding. They can't afford to make bigger payments, but the actual outstanding loan amount keeps increasing to a point where they feel they can never get out from underneath the loan. They'll never be able to pay it off. This will end that problem. As long as you are keeping up with your monthly payments, you will not accrue any interest on the outstanding loan. This is awesome. This is awesome. All right. Point number 3, undergraduate loan borrowers are going to see a huge reduction in monthly payments. This is really good. Okay. Up to a half. Your payments will be up to half of what they were before because of a change in the calculation. So there's a change in what is called the assessment rate. The Department of Education is going to base your monthly payment amount instead of on an assessment rate of 10% of your discretionary income. So that's the income above that 225% federal poverty line number that I just said before. Instead of basing it on 10%, your payments are going to be capped at 5% of your discretionary income. In other words, for most people, that should come down by about half. That's awesome, right? You're going to be paying half the amount and not accruing interest on it. And many people also will qualify for $0 payments. Amazing. All right, point number 4. Forgiveness of the loan is still possible. So this is not outright or not immediately a federal student loan forgiveness program, but effectively and built into the law is a mechanism to actually forgive your student loan. So pay attention. If you borrowed less than $12,000 for an undergraduate education, you will receive, if you maintain your payments every month for 10 years, your loan, the rest of your loan after that 10-year period will be forgiven. And that includes if your payment amounts were 0, okay? So in other words, there's a portion, about 1/5 of all student loan borrowers for undergrad will actually never pay $1, okay? Which is under the SAVE plan. So that's a really big deal, okay? Now, if you have a loan, and honestly, if you just look at statistics, the huge bulk of borrowers across the United States have loans under $10,000, and yet that loan continues to expand and hold them back from home ownership, marriage, having kids, lots of the things that you want to do in life. And so this actually just solves, like on a societal level, this actually solves an enormous quantity of the student loan problem. Most economists agree that the forgiving $10,000 of student loan is a good idea. And where people start to break off from thinking it's a good idea is when you get to amounts over and above $10,000. So this is why this amount under $12,000, they're kind of making it a lot more generous and easy to completely forgive your student loans. Okay. Now, here's how it works if you have an undergraduate loan of more than $12,000. Each additional $1,000 increment over $12,000 adds 1 year to your loan forgiveness timeline. So if your loan for undergrad was $13,000, then instead of your full amount being forgiven after 10 years of payments, it'll be forgiven after 11 years of payments, okay? If you borrowed $15,000 for undergraduate, that's 3 years past. It's $3,000 over 12, so that adds 3 years to the 10. So your loan will be forgiven after you've made all of your payments for 13 years, okay? Now, for those of you with enormous outstanding undergraduate loans, take heart. After 20 years, all undergraduate loans, if you have consistently every month made your payments, all loans after 20 years will be forgiven, okay? So it is ultimately a loan forgiveness program. It's just a longer timeline, okay? All right, now for those of you with graduate student loan debt, that's a little bit different. Your student loan payments will be forgiven after 25 years of payments, okay? That is clearly a longer time horizon, but take heart because graduate students, for one thing, your prospects for income are much higher, but you still get to benefit from that 5% cap of your discretionary income versus the 10%, and from a higher floor of discretionary, living expenses, okay? So your payment terms are still much, much more generous under this SAVE plan, even if you have graduate debt that's going to have a longer 25-year time horizon for full loan forgiveness, okay? Now, the forgiveness piece of this law goes into effect in 2024, not immediately. Grant you, I'm speaking to you in the early fall of 2023, so 2024 is not actually all that far away, so take heart. But the first two parts to go into effect are those $0 monthly payments and the zero interest so long as you're keeping up with your payments. Those both go into effect September 1st, 2023. As you are listening to this, it is after that date, and so they're already in effect, okay? So let's get into some of the nitty-gritty details about the SAVE program. First of all, who's eligible? Now, I want to remind you that this is about federal student loans, not private loans, okay? The SAVE program is for federally held loans only. This includes direct, subsidized, unsubsidized, and consolidated federal loans. It does include PLUS, P-L-U-S, plus graduate loans. If you have FFEL, I'm not sure how I say that, FFEL, Federal Family Education Loans, or Perkins loans that are held by a commercial lender, you will need to consolidate those into a federal direct loan in order to qualify for the SAVE program. But if you do that, then you do qualify, okay? Now, parents who have a Parent Plus loan are not eligible for this program. Another really exciting thing to differentiate this student loan forgiveness and federal student loan repayment plan from the last one, the original one that was struck down by the Supreme Court. What's interesting here is this program is not a one-time student loan forgiveness program. This program is permanent, okay? So it also means that future borrowers will be eligible for this program. So if you haven't started your undergraduate education or your graduate school, you will be eligible for this program as well, okay? That is different from the original student loan forgiveness program. All right, so how do you apply? First of all, you have to take action. You are not going to default into this program. You have to actively join it. Okay. That's unfortunate, but it's true. So you have to opt in. You have to take some action. The Federal Student Aid website has a calculator on it where you can see what your payments would be under the new plan. So I highly recommend you surf on over to studentaid.gov and take a look at where your payments are going to be automatically as those payments resume October 1st, and see how they will shift, mostly how they will be reduced upon joining the SAVE program, okay? Also, a detail for you to know, if you are in the program called REPAY, that is an acronym, I'm not sure what it stands for, but it's REPAYE, REPAY. If you're in the REPAY plan, and you can find out if you're in that, again, at studentaid.gov, you're going to click My Aid under the My Info sidebar. If you're in that REPAY program, you will be automatically moved into the SAVE plan, okay? That is one thing I want you to note, okay? There is going to be a bit of a time lag once you join, right? There is a verification process on the other end. And so when you apply, it may take a few weeks to take effect. So your first payment might actually be under the old numbers, okay? So I want you to get on this today if you can, and send this to all your friends who have student loans. Send this episode to them. Okay, so make sure that you go to studentaid.gov today and opt into that SAVE program. The application process will take you, I think, a little while, although they are redesigning the process with a goal of making it take less than 10 minutes to apply. I don't know if that is fully finished yet, but I want you to know that they are working on it. If it takes you more than that, it's still worth it and you should do it, but eventually it should get better. I want you to know that under the SAVE program, there is going to be a new option to opt into an IRS integration. So as a tax person, I'm really interested in this particular piece of the SAVE program. But what this means is you are allowed now to opt in to an integration through the IRS that will allow the Department of Education to access your tax return. Now, I know some of you are kind of freaked out at that, but what it means is you won't need to update your information each year or reapply. So that will save you a lot of work. And I don't know about you, but I am a set it and forget it kind of gal. And I love it when I have an option that will make things easy for me that I might forget. So if you're in that boat, I highly recommend that you opt into that IRS integration so that you will automatically be updated each year and not have to reapply, okay? Because obviously your IRS, your tax return, is how the Department of Education is going to verify your income and what percentage of the federal poverty line you are on to determine your repayment, your monthly payment amount, okay? All right, there's one more program I just want to mention. This episode is not fully about this program, but I just want to mention that it exists, that there is an additional program called the Fresh Start that is new, and it is there to help borrowers get back into good standing. So if you had federal student loans and you were in default before this forbearance period started in March of 2020, this new Fresh Start program will help you enter into this new income-driven repayment plan, which is wonderful and going to help you. It also will help you take out new federal student loans should you need those. And it can also help you clean up your credit score. So, as a financial planning person, I will say that your credit score is very important. It costs you a lot of money to have a bad credit score, and fixing your credit is a big deal for borrowing money in the future, accessing some of the things, the big ticket items, whether it be a car, a home, an education, etc. Okay. I'm going to give you some facts about this program, and then I'm going to finish up with some takeaways and your small, short to-do list, okay? So here are some facts. 1/5 of all borrowers under this program are not going to pay a dime. They will have $0 monthly payments and will have their full loans forgiven in the end. So that's kind of exciting. The federal government estimates that for every $10,000 it loans out in federal loans under this program, it will get paid back $6,100. In other words, this means that almost $4,000 of every $10,000 borrowed for federal student aid is going to be forgiven, okay? And disproportionately, that amount forgiven is going to affect lower income people. And yeah, I think that's a good thing. I think it's also important to know that this is a place where the Biden administration has dug in, has tried once, had their original ruling struck down by the Supreme Court, and tried again. And they've done it this second time with a much more secure legal footing. I have a lot more faith that this program, the SAVE program, is going to pass any lawsuits that come its way because it's standing on much more safe legal ground. I'll tell you about that in a second. The Biden administration has tried to pass universal pre-K and it's tried to pass free community college tuition, but could not get congressional approval for those things despite really awesome proposals. So getting congressional approval has been very difficult for the Biden administration. Okay. Now, during COVID, the Biden administration did successfully temporarily expand the child tax credit. And for the time that it was in effect, that cut child poverty in half. So when we take action like this, we can really move the needle on poverty and put money where the need is in this country. And the Biden administration did that. However, we elected a Republican Congress shortly thereafter, and that Congress did not choose to, it chose to let that expanded child tax credit expire. So we had it before, we could get it again. I'm just putting it out there, but it does require us to vote in a Congress that will do it. So, but the reason I'm talking about Congress and congressional approval is that without congressional approval, it is hard to get legislation passed. And the Supreme Court, if you have a memory that, oh, there was a student loan program, but it got knocked down by the Supreme Court, that is true. The Supreme Court basically ruled and said, you, the executive branch, do not have the authority to forgive student loans. You need congressional approval. So what's very clever and interesting about the Biden administration on this go-round is that they based this forgiveness program through an income-driven repayment plan. And I want you to know that in 1993, under President Bill Clinton, Congress approved the authority, the legal authority for the Secretary of Education to design income-driven repayment plans. Congress approved this. So for that reason, having based the bill in this part of the law, it means this is much safer, okay? This is much more likely to hold up to a challenge in U.S. Supreme Court. Now, I'm no legal scholar. I am just basically repeating things that I researched through the reporting of NPR reporters who were talking to, yes, genuine legal scholars, but that feels much more solid to me. So I hope that gives you a sense of faith that, yes, you should indeed apply for this program and expect that it will be there for you. Okay, now I am the tax person, and so I do have a tax person thing to mention to you when we talk about loan forgiveness. Now, obviously, the loan forgiveness part of this isn't coming for years down the road, but in general, I want you to understand that loan forgiveness under the tax code is considered taxable income. So that's weird to people because money never changes hands. So you kind of don't think of it like income, but it is, okay? So anytime you get a loan forgiven, now this includes this federal student loans, but it actually includes any kind of loan. When you get a loan forgiven, you should expect you're going to get a tax document in the mail from whoever held that loan and forgave it that will report the forgiven amount as taxable income. Okay, so I want you to just file that one away in your brain for the day that your federal student loan forgiveness comes through, and understand that that will be seen as taxable income for you, that you will be reporting on your tax return. And you will have no choice because you will be given a tax form that will get sent, not just a copy to you, but a copy to the IRS. So that is enforceable. All right. So here are your takeaways. I want you to be very, very clear because you do need to take action to get these lower payment amounts and get this ultimate loan forgiveness. You have to take some action. You have to join the SAVE program. So here's what you need to do. Here's what you need to know, and then we'll talk about what you need to do. These are your takeaways. 1, interest starts accruing September 1st. This podcast is dropping after September 1st, so that's already happened. In other words, your interest on your student loans after a 3-year stoppage have just restarted. Okay, so your interest right now is accumulating. Second timing piece, October 1st, loan payments resume. Okay, so you are going to be required to make your loan payments once again. They start back up October 1st. Now, here's what you need to do. I want you to understand what your loan payments are going to look like by default, and then what they would look like under this new SAVE program. It's going to be important for you to look at your numbers, and you may need to make some changes in your budget to accommodate this loan payment that you haven't had to make for 3 years. And if you're a recent graduate, you may never have had to make a loan payment for your student loans up to this point, and you're now going to get hit with this new reality where the loans in fact are due. Okay, so do some math, get out a calculator and a pencil, and you may need to do a little budgeting this month to figure that out. Another thing I want you to do, a lot of loan servicers have changed in the last 3 years as loans have been on pause. So if your loan servicer has changed, I want you to make sure you know that. So contact your old one and see if it moved. And I want you to set up your account with your new loan servicer. You want to be sure you're all set up and ready to be able to make that payment come October 1st. Lastly, and most importantly, I want you to go to studentaid.gov to find out what plan you are on right now and opt in to the SAVE plan, okay? You want to opt in so that you get all this good stuff that the Biden administration has set out for you, okay? And then finally, just one word of warning, there are scams out there. Anytime there's new changes like this, scammers take advantage and they try to call you and scare you and make you pay money. And I just want to warn you, no loan servicer is going to charge you for help through this process. So if somebody's trying to charge you money for help through this, it's a scam, okay? Beware giving any student ID numbers, any tax information, any identifying information to anybody you don't know, okay? So phone calls, emails, asking for that kind of information, take it with a grain of salt and be wary, okay? All right. So I want you to head to studentaid.gov and I want you to fill out, look at what your loan payments are going to be and opt into that new SAVE plan for reduced payments and potential total loan forgiveness. All right. I hope this has been really, really helpful for you. I appreciate you being with me. I want you to know that if you're feeling, if you have friends who have student loans, please share this episode with them. This is a program you have to opt into. So if people don't know to opt in, they're not going to get the benefits. Okay. So please share this episode with your friends. The other thing I want you to know is if you enjoy getting updates about federal legislation that affects your life and your money, especially, I want you to know that in my program, Money Bootcamp, this is a service I provide for all of my boot campers. Every time new federal legislation is going to affect your taxes, I am there and I put out a video and I create a worksheet with all the details and links to all the places that a person needs to go to make the changes. So I just want you to know that that is a part of my program, Money Bootcamp, that is always included. That is the work that I maintain and keep up to date with. It is, the tax information that you certainly aren't going to get from a business coaching program just anywhere. So in the last year, I've done programs on keeping up with the federal student loan repayments. I've done it on the new tax credits for clean vehicles and home energy audits, all of the stuff in the Inflation Reduction Act. I've done work on the Secure 2.0 Act, which allows people to put more money into retirement savings accounts, withdraw money from their 401ks under new expanded emergency situations, etc. So there's all kinds of tax legislation affecting your life every day. And I, as a service to the people in my program, Money Bootcamp, I always make sure that you are right on top of it so that you can either print out my resource and bring it with you to the accountant to ask your questions in the most intelligent and directed way, or so that you can know where to go to get the credit. So I hope that's helpful. If you're interested in Money Bootcamp in general, you can sign up for the wait list. I am going to be having a launch starting September 21st. I will be opening up the program, and you can get ready for that at sunlighttax.com/waitlist. You will be the first to know when the program opens. So if that sounds good to you, head to sunlighttax.com/waitlist. Just put in your email and I will notify you as soon as it opens up. Go out there, go to studentaid.gov, get that money, and I will see you on the next episode. Bye, y'all. Thank you for listening. If you like the show, be sure to subscribe, leave a review. It really helps, and share it with a friend. I'm so grateful. This podcast is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links we reference at sunlighttax.com/podcast.